Let's establish why Pi Network represents something fundamentally different in the cryptocurrency landscape. While Bitcoin miners burn through electricity bills that could fund small countries, Pi allows users to mine directly from smartphones without destroying batteries or requiring technical expertise. This isn't just convenience, this is democratization of wealth creation on a scale never attempted before. Pi's mobile-first approach has penetrated regions where traditional mining infrastructure doesn't exist. We're talking about users in developing economies who've been systematically excluded from crypto wealth generation. When these 60 million users suddenly gain access to liquid markets, the demand dynamics won't follow any historical precedent. The Pioneer reward system creates ecosystem investment beyond simple coin accumulation. Users earn through mining, app development, governance participation, and education contributions. This multi-layered engagement builds psychological ownership that speculative traders simply don't possess. When Pi hits exchanges, we're not just seeing another token launch. We're witnessing the activation of the largest crypto community ever assembled. Exchange listings function as liquidity explosions that transform community projects into tradable assets. Binance and Coinbase don't just provide trading access, they validate legitimacy, attract institutional attention, and create price discovery mechanisms for previously theoretical valuations. Historical precedents offer contradictory signals. Shiba Inu exploded from obscurity to multi-billion market cap following major listings. Solana experienced similar trajectory when institutional access became available. However, many community-driven projects crashed spectacularly when speculative traders overwhelmed organic demand. Pi Network's situation differs from every previous case study. Most tokens launch with limited user bases hoping to attract adoption. Pi launches with established adoption hoping to access liquidity. This inverse dynamic could create upward pressure that defies traditional listing patterns. The question isn't whether Pi will experience volatility. The question is whether fundamental utility can sustain whatever initial price discovery occurs. And this brings us to the element that separates Pi from speculative tokens: real-world application infrastructure. If you're beginning to understand why Pi's exchange listing represents a completely different animal than typical token launches, crush that like button and subscribe to TJ Crypto World immediately. What I'm about to expose regarding Pi's utility foundation could explain why conservative price predictions might be laughably low or dangerously optimistic. Hit those notifications because the 3 historical patterns I mentioned earlier reveal timing strategies that could maximize your positioning before the listing announcement. You cannot afford to miss what's coming next. Here's where Pi Network separates itself from meme coin lottery tickets: actual utility infrastructure that creates sustainable demand beyond speculative trading. Pi's ecosystem includes decentralized applications accepting Pcoin for services, peer-to-peer transaction capabilities, and developing retail payment integration. Developers within Pi's ecosystem are already building functional applications that require Pcoin for operation. This isn't theoretical utility promised in white papers. This is operational demand that exists independent of market speculation. When exchanges provide liquidity access, these applications create constant buying pressure from users who need Pcoin for functionality rather than investment. The KYC verification process, often criticized for slowing adoption, actually creates compliance advantages that facilitate exchange listings. While other projects scramble to meet regulatory requirements, Pi has proactively built systems that satisfy institutional due diligence standards. This compliance-first approach positions Pi for listings on regulated exchanges that require strict verification protocols. Traditional DeFi tokens might access decentralized platforms first, but Pi could debut directly on institutional-grade exchanges that attract serious capital rather than speculative trading. Pi's 60 million user community represents accumulated demand that's been building pressure for years without release valve access. These aren't passive holders hoping for pumps. These are active ecosystem participants who've invested time, effort, and belief into platform development. Community speculation ranges from conservative $1 debuts to aggressive $314 predictions based on user-to-market cap ratios compared to other cryptocurrencies. While specific numbers remain guesswork, the psychological investment of long-term pioneers creates demand foundation that speculative tokens lack. The pioneer mindset differs fundamentally from typical crypto traders. They've participated in ecosystem building, tested applications, and contributed to development. When listing access arrives, they're not looking to flip for quick profits. They're looking to utilize years of accumulated value. This creates potential for sustained buying pressure that could support whatever initial pricing emerges. However, it also creates risk if exchange speculation overwhelms organic community demand with artificial volatility that undermines long-term utility development. Now here's the factor that most analysts completely overlook when predicting Pi's exchange debut: regulatory positioning that could determine whether Pi launches on retail exchanges or attracts institutional platforms first. Pi Network's emphasis on identity verification and compliance infrastructure positions them for regulated exchange partnerships that require strict due diligence. This could mean Pi debuts on institutional platforms before reaching retail speculation markets. Institutional buyers evaluate utility, compliance, and long-term viability rather than social media hype and technical analysis patterns. If Pi secures institutional exchange access first, initial pricing could reflect fundamental valuation models rather than speculative enthusiasm. This might mean lower volatility, but higher stability, creating sustainable growth rather than explosive pumps followed by devastating crashes. The timing sequence, institutional first versus retail first, could determine whether Pi becomes a sustainable digital economy foundation or another speculative trading vehicle that destroys long-term utility development. If you're realizing that Pi Network's exchange listing could unfold completely differently than every previous token launch because of their unique positioning between community development and institutional compliance, show massive support by smashing that like button and ensuring you're subscribed with notifications activated. The regulatory positioning angle I just revealed explains why timing your Pi accumulation strategy could be more critical than predicting exact listing prices. Subscribe to TJ Crypto World because understanding these institutional dynamics separates profitable crypto positioning from gambling on unpredictable market reactions. That's our comprehensive analysis of Pi Network's potential exchange listing and why it represents unprecedented territory in cryptocurrency market dynamics. We've examined the mobile mining revolution that created the largest crypto community ever assembled, explored how utility infrastructure creates sustainable demand beyond speculation, and revealed why regulatory positioning could determine whether Pi becomes institutional darling or retail trading vehicle. Your engagement powers everything we accomplish here at TJ Crypto World. Every like, every comment, every share enables us to continue delivering analysis that examines fundamental development over market manipulation. If this Pi Network exchange analysis opened your perspective to how utility-driven projects approach market access differently than speculative tokens, I've curated an entire series exploring projects building sustainable value through documented problem-solving rather than social media campaigns. Until next time, this is TJ from TJ Crypto World, reminding you that in cryptocurrency markets, projects that build genuine utility and regulatory compliance don't just survive exchange listings, they use market access to accelerate real-world adoption that creates sustainable value beyond speculative trading. See you in the next analysis.